Welcome, friends. It's Scott Riley, the Market Update Desk. September 5th. We're coming at you from the Cabana office. We've still got it open. We're enjoying these last few really nice days. So, data started to roll in today for more job data, and lo and behold, the weakness in the jobs portion of the economy continues to be prevalent. So, first thing that came out today was the Challenger Jobs Cut report, which basically is a count of layoffs or mass layoffs in labor. It showed 75,891 layoffs in August, well above the projected amount of 25,885. So we've got layoffs occurring, an increase in what's called the WARN notices. Those go hand in hand. Initial jobless claims showed slightly better than expected. Initial claims were down 5,000. Continuing claims were down 3,000. So there's a little bit positive there. Here's where we get to the big one. The ADP payroll report. The initial estimates, 145,000, were revised downward a few days ago to 111,000. What's the number that we got? 99,000. That is a stunningly significant miss to the downside on private payrolls. And in fact, the previous month's figure was revised lower from 122 to 111,000. So again, we had extremely slow job gains, which is still good. We had gains, keep in mind. Extreme lower than expected, and previous months was revised lower. Now, tomorrow we get the very important BLS jobs report. If we look at the big miss on JOLTS, the big miss on the Challenger job cuts, and the enormous miss on the ADP payroll, that should line up for a less than expected number from BLS tomorrow. As we all know, the BLS can come in and throw a lot of BS at us through their birth-death model. So we're going to anxiously await that. In the market and the technicals today, equities are struggling, which is not a surprise. Semiconductors continue to be hit pretty hard, and even a lot of discount retailers, Dollar Tree, Dollar General, both of those took enormous hits over the last week of down over 25 to 27% both. So where this number comes in on the BLS report tomorrow is going to be very curious. The 10-year bond today broke below the important 3.8, and we're sitting right now, as I'm looking, 3.75. That's great things for mortgage rates. Mortgage-backed securities are up about 7 or 8 basis points, so that helps. We're seeing continued great rates. Don't be we've talked about it. Don't be behind the curve on shopping and refinancing. Access the rates that are out there right now, because you just don't know. Will the BLS come in at a good number tomorrow or a bad number? And then as we lead up to the Fed decision September 18th, all these things are taken into their full context and the full global aspect of it to determine, are they going to do a quarter or a half? Just keep in mind, a lot of the market analysts are basing things on having a half-point decrease. If we don't get that half-point decrease, you could absolutely see bonds go the other way and mortgage rates tick up. And I know that sounds odd. If the Fed decreases, could we see an uptick in mortgage rates? It's possible, depending on the context of the language and the amount of the cut. We hope you find this interesting and helpful. Follow us on all the socials, the Market Update Desk. Scott Riley, NMLS 157524. Give us a call, 616-293-2189. We'll help you get you taken care of for pre-approvals, refinances, and access our knowledge to help you. Have a great afternoon.